Okay, in this video we will work exercise 9-3A. That is on page 343 of the textbook, and it is work paper 292. Work paper 292. Okay, 9-3A says, selected information from the payroll register of Joanne's Boutique for the week ended September 14th is as follows. Social Security tax is 6.2% on the first $118,500 of earnings for each employee. Medicare tax is 1.45% of gross earnings. FUTA tax is 0.6% and SUTA tax is 5.4% on the first $7,000 of earnings. And then you can see the partial payroll register, and below it says calculate the amount of taxable earnings for unemployment, Social Security, and Medicare taxes, and prepare the journal entry to record the employer's payroll taxes as of September 14th. So the first thing that we're going to have to do is to calculate how much is taxable for unemployment and how much is taxable for Social Security. So if you remember, let's start with unemployment. So if you remember, there is a $7,000 limit for unemployment compensation. So only the first $7,000 is taxable for unemployment. Okay, this individual, Stephanie, had $6,600 before this pay period. And then in the current pay period, she earned $1,190. So just on your scratch paper somewhere, you can make these calculations. $6,600 plus the current earnings of $1,190 brings Stephanie to a cumulative total then of $7,790. So you can see that before this pay period that she was below the limit. And now after this pay period, she's over the limit for unemployment tax. The amount by which she's over the limit is not taxable. So if she has cumulative earnings now of $7,790, the limit is $7,000. So she is over the limit by $790. So $790 is not taxable. How much is taxable? What did it take? So she was at $6,600. What did it take to bring her up to that $7,000 limit? So if you take her current earnings, $11,090, and you subtract how much those earnings caused her to go over the limit, then you would see how much is taxable. It was $400 that caused her to reach the limit. So she was at, another way to say this, she was at $6,600 before this pay period. $400 of the current earnings brought her up to the $7,000 limit. So what brings you up to the limit is taxable, but once you go over, so we went over by $790, that is not taxable. So the amount that is taxable for unemployment compensation is going to be $400. Okay, the next employee, Emily, had $6,150 before the current pay period. In this pay period, she earned $1,070. So again, on your scratch paper somewhere, she had $6,150. In this pay period, she earned $1,070. So that brings Emily up now to a cumulative total of $7,220. So she was under the $7,000 limit with $6,150. Now she's over the limit with $7,220. So since she was under the limit, now she's over the limit. Some of the $1,070 is going to be taxable for unemployment, and some of it is not. The amount of the $7,220 that caused her to go over the limit is not taxable. So out of the $7,220, she is over the limit by $220. So $220 of the earnings is not taxable for unemployment. The rest would be. So $1,070 minus the $220 that caused her to go over the limit. That means $850 is taxable for unemployment. Another way to say that would be to say that 220. Let me back up. $850 made her meet the $7,000 limit. What is taxable is the amount up to this. So since it took $850 of these earnings to meet the limit, then $850 is taxable. Sorry. Okay, so $850 of the $1,070 is taxable for unemployment. Now, if you look, the next person, Stefan Palmer, was already well over the $7,000 limit before this pay period. So since he was already over the limit, none of it is taxable for unemployment. Same thing with your next three employees. They are all well over the $7,000 limit before the current pay period. So since that is the case, none of the current earnings are going to be taxable for unemployment. Okay, now how much is taxable for Social Security? Remember that Social Security has a limit of $118,500. So only the first $118,500 worth of earnings is taxable for Social Security. If you look, these individuals are nowhere near that limit. Nowhere near the limit. $6,000 plus the $1,190 is not going to be anywhere near $118,000. Here on Emily, $6,150 plus $1,070. You're not going to be anywhere near the limit. Here you got $55,000 plus $2,410, $54,000 plus $2,280, $29,000. None of these are going to be anywhere near that $118,500 limit. So since that is the case, then all of their earnings are taxable for Social Security. So $1,190 for Stephanie, $1,070 for Emily, $2,410 for Stefan, Robin, $2,280, Hannah, $2,030. Now the only one that even gets close to that limit is down here. So we'll have to check and see. She's definitely below the limit before this pay period. So let's see what happens. Before this pay period, Zoo had cumulative pay before current earnings $116,630. And then during this pay period, earned $2,850. So that makes the cumulative pay now $119,480. So yes, before this pay period, Zoo was below the limit, and now after this pay period, Zoo is over the limit. So the amount of this pay, the amount of the $2,580 that caused Zoo to exceed the limit is not taxable. So how much did we exceed the limit? $119,480 minus the limit of $118,500. So the limit is exceeded by $980. So $980 is not taxable for Social Security. So how much is taxable? So $2,850 minus the $980 that's not taxable would give you $1,870 that is taxable. Sorry, I've got to get rid of all these extra marks. Okay, so $1,870 is taxable for Social Security. Okay, on your work paper, let's just fill this in. I kind of did that so I wouldn't have to swap back and forth so much. So give me 1 second. Let me fill in all the numbers that we just calculated on the working paper. Okay, so if you can see, I just copied the numbers that I had entered on this page into the working paper. So this is what yours should look like. Now, once you have the taxable amounts calculated, then you must total. So let's total each of these columns. So the total of the current earnings column is $11,830. The total of the taxable earnings unemployment compensation is $1,250, and the total of the taxable earnings for Social Security is $10,850. Okay, now with that, we are ready to go through our 6 steps to calculate the employer's payroll taxes. Now, step 1 says to obtain the total earnings and taxable earnings from those columns on the payroll register. So we just did that. We have the 3 totals that we're required to gather in step 1. The total of the current earnings column, the total of taxable earnings for unemployment, and taxable earnings for Social Security. With those 3 numbers, then we are ready to move to step 2. And step 2 says to compute the amount of employer Social Security tax by multiplying the Social Security taxable earnings times 6.2%. So our Social Security taxable earnings, the Social Security taxable earnings, $10,850. So we're going to multiply that amount times the 6.2%. So that is $672.70 for Social Security tax. Then step 3 tells us to calculate Medicare tax. And we calculate Medicare tax by multiplying the total earnings, because there is no limit for Medicare tax. So we always go to this column to get the amount that's needed to calculate Medicare tax. So the total earnings times the Medicare rate of 1.45%. So our Medicare tax is $171.54. Okay. The fourth step says to calculate FUTA tax by multiplying the FUTA rate of 0.6% times the total of the taxable earnings for unemployment. So how much is taxable for unemployment tax? We always go to this column to get this total in calculating unemployment tax. So for federal unemployment tax, it's going to be $1,250 times the 0.6%. So our FUTA tax is $7.50. And then step 5 is to calculate the SUTA tax. And SUTA tax is always calculated by going to that same spot, the total of the taxable earnings for unemployment. So again, it's $1,250, and then it will be times your state unemployment tax rate, which is 5.4%. So our state unemployment tax is going to be $67.50 in this problem. And that's our 4 employer payroll taxes. So then we will add those together, and our total employer payroll taxes is $919.24. Total employer payroll taxes. Okay, so that is steps 1 through 5. And the last step, step 6, is to use this information to record the employer payroll taxes journal entry. So the journal entry is always dated the date of the payroll, and they told us here that that was September 14th. We debit, always, debit payroll taxes expense for the total of all the employer payroll taxes. So this will be debited for the total that we determined of $919.24. $919.24. Okay, that's your only debit to the payroll taxes entry. Then you will credit each of your different tax liability accounts. So our first credit will be to Social Security tax payable. For $672.70. Then we will credit Medicare tax payable. For $171.54. And then we will credit our FUTA tax payable. For $750. And then finally we will credit the SUTA tax payable. for $67.50. Always double check to make sure your debits equal your credits before you enter an explanation. And we're going to say to record employer payroll taxes. Okay. So that is exercise 9.3a.